Greetings to all. Now we are going to continue with sums related to interest on capital. So switching towards the very first sum, that is sum number 13. Rahul and Rohit and Karan started the partnership business as on April 1st, 2016 with the capital of 20 lakhs and 18 lakhs and 16 lakhs respectively. The profit for the year ended on 31st March 2017 amounted to 1,35,000 and the partners' drawings has been 50,000 and 50,000 respectively, and Karan is 40,000. The profits are distributed in the ratio of 3:2:1. Calculate interest on capital at 5% per annum. Now in this sum here, April 1st, they had mentioned over here April 1st their capital is 20 lakhs, 18 lakhs and 16 lakhs. So this is their opening capital, right? And rest items like profit is given, then drawings is given, this and the distribution of profit and loss 3:2:1 is given. This we are right now for this particular sum it will be immaterial because we are asked to find out only interest on capital at 5% per annum. So when we are starting the sum, we have to first, when we are finding interest on capital, then very first thing you have to remember that always there should be opening capital, because every time interest on capital is always calculated on the base of opening capital. So opening capital is 20 lakhs, 18 lakhs and 16 lakhs and rate of interest is given 5% per annum, and they had holding this capital from the starting of the month. So on the starting of the month they are standing with the capital, so it will be calculated for the full year. So here time factor will be 12 upon 12. So 12 upon 12 will give you 1. When we do this, then 12 upon 12 gives you 1. So when we are calculating this, we have to directly do working as 20 lakhs at rate 5%. So here interest on capital, amount of capital multiplied by rate of interest multiplied by time factor upon 12. If you don't write time factor also here, because no months and nothing is given, so if you don't write time factor, it is also okay. So here now we are calculating this. So here Rahul stands with 20 lakhs multiplied by 5 upon 100. 5% is their rate of interest. So 20 lakhs multiplied by 5 upon 100. Same way 18 lakhs multiplied by 5 upon 100, and same way Karan is equal to 16 lakhs upon 5 upon 100. So this way the sum goes to the solution towards this like this, that is Rahul 1 lakh, Rohit 90,000 and Karan 80,000 respectively. So this way we can get the calculation of interest on capital. Now we will be switching towards the next sum. Sum number 14. Sunflower and Pink Rose started business on April 1st, 2016 with the capitals of rupees 2,50,000 and 1,50,000 respectively. On October 1st, 2016, they decided that their capital should be rupees 2 lakhs each. यानी क्या हुआ है, 1 अप्रैल को उन लोग के पास 2,50,000 सनफ्लावर का था और 1,50,000 पिंक रोज का था. क्लियर. नाउ फ्रॉम अक्टूबर ऑनवर्ड्स उन लोग ने क्या डिसाइड किया कि सनफ्लावर का भी कैपिटल 2 लाख रहेगा और पिंक रोज का भी कैपिटल 2 लाख रहेगा. द नेसेसरी एडजस्टमेंट्स इन द कैपिटल्स आर मेड बाय इंट्रोड्यूसिंग और विड्रॉइंग द कैश. यानी अब आप देखोगे तो यहाँ क्या हुआ है, 2,50,000 सनफ्लावर का ओपनिंग कैपिटल था, बट इन द मिडल ऑफ द टर्म दैट इज़ ऑन October 1st उसका कैपिटल कितना हो गया, 2 लाख. यानी ये जो 2,50,000 है उस पर 6 महीने का लगेगा और ये जो 2 लाख है उस पर वापस का 6 महीने का लगेगा इंटरेस्ट ऑन कैपिटल, राइट. सो इंस्टेड ऑफ डूइंग दिस we have another way of solution. In a very simple way we will be doing this. What we will do is, first of all, 2,50,000 for full year we will calculate of sunflower. Look at the working, what I have done over here. Same interest on capital working is to be done. 2,50,000 for full year I have done 25,000. Is this clear? Now of this, 50,000 is withdrawn by him. He has withdrawn this 50,000 from the firm. So now his capital turns up as 2 lakhs. So जो 50,000 विड्रॉ किया उसका हमने यहाँ पे कैलकुलेट कर दिया है, क्योंकि हमने यहाँ पे क्या लिया था, 2,50,000, राइट. सो हमने जो 50,000 एक्स्ट्रा कैलकुलेट किया है, 50,000 extra we have calculated, that we are going to minus it. So while minusing this, we can easily get that final answer, that is 50,000 at rate 10 upon 100 multiplied by 6 upon 12. Here we will be calculating for 6 upon 12 because October, November, December, January, February, March. So this will be calculated for 6 months over here, and that gives you 2,500, which we will be minus from the yearly interest on capital of the firm. तो हमारा फाइनल आंसर हमको मिल जाएगा 22,500, राइट. इसको एक अलग तरीके से भी कर सकते हैं हम लोग. उसको पहले कंसंट्रेशन के साथ सुनना. क्या करेंगे हम लोग, 2,50,000 जो है, ये 2,50,000 उसको 6 महीने का करेंगे, और या तो फिर 2,50,000 का 6 महीने का करेंगे, और फिर 2 lakhs का 6 महीने का करेंगे. 2,50,000 का 6 months का करेंगे और 2 lakhs का 6 months का करेंगे. तो if we will be doing that, then also we will get the same answer, 22,500, right. So here this way we can do in a very easy form, but this is most easiest one, so I am doing that. Then comes your pink rose. Now how pink rose will work out? So pink rose is having 1,50,000 as a original capital. You can see on the screen pink rose. Here I had highlighted pink rose 1,50,000, right. Of this, full year 15,000 will be the answer while calculating at rate 10%. Now if he wants to keep a capital of 2 lakhs, right, 2 lakhs each, then what he has to do is 50,000 he has to brought in business. So 50,000 he will be additional getting in the business. So that will be calculated in this particular form, that is 50,000 multiplied by 10 upon 100 multiplied by 6 upon 12. The same calculation, October, November, December, January, February, March. So this way final conclusion we will get is 17,500. So both the answers will come this way. Have a look on this first. Okay, now we will move on to another sum number 15. On March 31st, look upon for the date every time. The date are very important in this sums. On 31st March 2017, after the close of accounts, the capitals of Mountain, Hill and Rock stood in the books of the firm at rupees 4 lakhs, 3 lakhs and 2 lakhs respectively. So this is what 31st March 2017. Subsequently, it was discovered that interest on capital 10% per annum has been omitted. वो लोग भूल गए 10% per annum charge करना. The profit for the year amounted to 1,50,000. Profit पूरे साल का कितना है, 1,50,000. And the partners' drawings has been of Mountain is 20,000 and Hill is 15,000 and Rock is 10,000. Now here you are asked to find out, calculate interest on capital. So in this sum also they had mentioned here that this is what closing capital after the close of accounts. Now I want to highlight one more thing, like you can see in the previous sum. In the previous sum, it was given like on April 1st, 2016. So this is opening one. But here it is purely mentioned that interest on capital after the close of accounts. the capital of mountain, hill and rock stood to this much. So we have to switch on with that working only. So this is 4 lakhs, 3 lakhs and 2 lakhs, that is your closing capital. So first of all, we have to turn up our sum into the opening capital. Why opening capital? Because interest on capital is always calculated on the opening capital. So for that we will be referring the working note for the opening capital. So have a look on this. I have shown here the statement showing working capital. This is a part of your answer only. You have to show in the working note. So that will be also part of your answer. So very first thing, closing capital. So closing capital stands with mountain, hill and rock, 4 lakhs, 3 lakhs and 2 lakhs respectively. Then if you remember last year in the balance sheet, how we used to prepare this way? So we used to prepare this way: capital first, then add net profit, right? Then add net profit, whatever you get, then less drawings. If you remember this technique, you will come to know that in the balance sheet final figure we used to take it outside, right? Final figure is termed as closing capital. So we are going to do reverse of this method. Reverse of this method means what? Closing capital, that is this one, plus drawings. As here it is minus drawings, we are going to do plus drawings. Then plus net profit. So instead of plus net profit, it will be minus net profit. And finally opening capital. So this will be the scenario. So we will be switching towards that in a very easy form. So you have to remember that in the last year, what we have done is opening capital plus net profit minus drawings. So reverse the whole thing. The reversing of whole thing will give you first closing capital, then drawings add, instead of minus in the previous year, now it will be drawings add and less net profit. So ultimately I am switching towards the solution of that. So have a look for that. So first thing I have done is transferring of the capital. So here 4 lakhs, 3 lakhs and 2 lakhs as closing capital. And one more thing, here drawings is given, that is drawings of mountain 20,000, hill 15,000 and rock 10,000. So all is to be first transfer. That is done over here. Have a look. 4 lakhs, 3 lakhs, 2 lakhs respectively, and 20,000, 15,000 and 10,000 respectively. So when we are adding this, we will get 4 lakh 20,000, 3 lakh 15,000 and 2 lakh 10,000. Now they had mentioned that the net profit is how much? So net profit is standing with 1,50,000 and their profit sharing ratio in the sum, profit sharing ratio is not mentioned. So when profit sharing ratio is not mentioned, we have to distribute them equally. So looking at this net profit, I have distributed them equally among 3 partners. So 1,50,000 divided by 3, because 3 partners are there. So divide by 3 gives you 50,000, 50,000 and 50,000 respectively. So this way final answer we will get is 4,20,000 minus 50,000, that is 3,70,000, 3,70,000, 2,65,000 and 1,60,000. So now we will be switching towards finding out. This is your opening capital you got. So now we will find out our interest on capital. So looking at the sum solution, here it is there, that is 3 lakh first, 3,70,000 multiplied by 10 upon 100, 37,000. Same way 2,65,000 multiplied by 10 upon 100, 26,500 and 1,60,000 multiplied by 10 upon 100, 16,000. So this way final answer comes. These are some small sums which will carry somewhat like 3 or 4 marks in the examination. Now comes next sum, sum number 16. Following is the balance sheet of Nilkant Mahadev as on 31st March 2013. Now balance sheet as on is given, that is you can see over here. Nilkanth's capital is 10 lakhs, Mahadev's capital 10 lakhs. Nilkanth's current account is 1 lakh, Mahadev's current account is 1 lakh. P&L appropriation given 8 lakhs and 30 lakhs is sundry assets. During the year, Mahadev's drawings is 30,000. Profit during the year 2013 is 10 lakhs. Calculate the interest on capital 5% per annum for the year ending on 31st March 2013. Now in this sum, a very important thing you have to remember is, first of all, always your capital of interest, that is interest on capital, will be calculated on the opening balance. Now in the sum, you can see there is current account highlighting. So current account is highlighting over here, which gives you balance of 1 lakh over here, you can see over there. But we are least concerned with this. Why we are least concerned? Because this interest on capital will be calculated on the opening balance. Now here Nilkanth and Mahadev, they are having a fixed capital. So when there is a fixed capital, no more consequences will be there. Directly you have to find out this way, that is 10 lakhs multiplied by 5 upon 100, that is 50,000, and same way 10 lakhs multiplied by 5 upon 100, and this will give you finally full year interest on capital, and that is here finally interest on capital. So when the partner's current account is given, then it's a fixed capital. So nothing more things are to be done, because nothing is mentioned for the withdrawal, that is fixed withdrawal of the capital or additional capital. So we have to assume that this capital is opening capital, which will be closing capital itself, as we have learned in the previous all the sums, that when this such things are given, then interest on capital is calculated on opening fixed capital itself. So this way, yes, this sum comes to an end. So that's it. Thank you.